Greetings, Jedi traders. David here of TradingFibs.com to bring you state of the indices and crude market recap and outlook for the week ending October 30th, 2015. As always, please seek financial advisement when trading with your money, as these videos are for educational purposes only. Support your knowledge of the market, see what's going through my head on any given day. Always make sure you have a solid trading plan and always manage your stop when placing a trade. Let's jump in right to the Russell this week as we saw price action on the FOMC lift on Wednesday, and the minutes coming out saying no interest rate hike as of now. Weekly opening price at 1160.10, just barely finishing below it here at 1157.6, closing out and marking on the chart each day by a solid line, a daily gap. One, it's closed, conforming here to a dash line. So there it is, 1, 2, 3, 4 open gaps. Do we have open gaps below? Yes, we do on all the major indices. We'll talk about that here in a little bit. But again, 1113.5 is the lowest open gap here on the daily Russell. Again, closing out the week at 1157.6. Jumping here into the YM, we have the weekly opening price at 562. Daily gaps, count them up, 1, 2, 3, 4, 5, with a closing price here at 599. What's the significance of the daily gaps? Just simply a line at the end of the day, but price action tends to, at some point, bounce, fade off that, using it on the intraday session. What concerns me more in the big picture is where are the open gaps down below, because on an intraday, regular trading hours, open gaps always will eventually get closed on the 4 major indices. So with room still to come to the downside, just a matter of when. Let's jump into the NQ. Again, NQ closing out its daily gaps, marked here on the chart with the weekly opening price here about 45.15.25. Getting that lift on Wednesday, leaving an open gap up here at 73.25 with plenty of room to the downside here on the turquoise lines as low as 39.97.50, closing out the week at 46.50. Here we can see each previous day closing out the points of control. And moving forward to the ES, we could see price action Monday, Tuesday, followed by Wednesday with that lift. Weekly opening price at 66.75, closing up above 74.25. Here we see the TPOC on Wednesday being closed out on Friday and holding up here for a good portion of the session on Thursday and Friday, up here at that 2083, 2083.75 for the ES. Let's jump into crude here. Crude we know to be in a downside for the most of the month. As we can see, we got a little bit of lift here in the last 3 days of this week. We could see price action closing out each previous daily plus former daily gaps, 45.49, taking care of business. 43.39 here, the lowest open gap here on the chart, with an open gap up here at 47.72. That would eventually be closed out, finishing out the week at 46.39. Let's jump into the volume profile. Volume profile here on the TF showing a 600 period with a mean of 1144.5. What I want you to take note here for the week, as we see price action represented by 70% of the daily price action. Again, my bias to the volume profile is I'd rather see how much was traded, what was the volume at any given level versus time in the market. Shows me a better indicator of where value is, and showing that value here represented by the orange, 70% of trading, and the pink line represented as the open points of control, or open POC, naked VPOCs. Here we can see 1144.5. There you go, bright bounce on Wednesday with all that market action. Bounced right off the 1144.5, closing out the point of control on Wednesday, on Thursday's price action, and Friday closing the point of control up here at the high end of the value area, closing out the week as we saw here on the market profile, saying the same thing here on the volume profile. Jump over to the YM. We could see here again points of control being closed out during the week. Much different, a little bit different picture. Again, when you compare the time profile to the volume profiles, the question is how much volume was up here at these upper extremes, only to see that on Thursday we built some value area higher, and Friday again testing a little bit higher as well on the volume profile, all the way up here to about I don't remember that high number here, about 17,721. Again, 70% of that rate majority of the volume during the session. And again, if we were to look at the 600 period, all the way down to 617 would be the mean of a 600 period moving average, indicating that a possibility of price retracement in the future down to those levels. Let's jump back into the NQ here in the volume profile. Again, here we see a former point of control closed out on the outlier on Wednesday's price action with the FOMC minutes coming out. Open point of control down here 45.60 with plenty of open points of control downside on the NQ, nothing to the upside as we sit here at these highs. Price action on Friday, again similar as we saw here in the YM on the outlier on Wednesday. Building some value area here on Thursday in the area of the 70%. Most of the volume being traded here within the 46.52, 46.56 area. And then again, the point of control being the lower end of value on Friday as price action even pushed higher. Volume profile on the ES, remarkably, as we saw here on the market profile, let's jump back here to the ES. We saw price action up here 2083, 2083.75 with the daily gaps. I mentioned that the majority of price action again was up in these upper extremes. Again, a significance here, as you can see on the volume profile, in the 600-day here, the 2083.50 was the mean. That's your POG, that's your point of control over 600 period over the 600 days. So again, interesting to see that price action hung here at the 2083.50. Again, at the end of the day, it's just another line on the chart. Whether we bounce or fade off of that gave us an indicator of trend. But again, throughout the week, Wednesday lift on the ES, point of control taken out on Friday from Wednesday. But again, the majority of the session here, you could see settling in just under, that's right, just under that 2083.50. Let's jump into the volume profile set to a 600 period average. Here we got the 45.87. You can see by the lines here, price action at the lower end of volume on Thursday, hanging here at the 45.87. Same, almost similar picture on Friday as crude got a lift, 70% of its trading upside of the 600 period point of control 45.87. So there is the big picture on your market profile, volume profile. Again, one of the nice features enabled on the volume profile here on my charts now, a new ability. I can either keep this on a 1-minute chart or a range chart depending on what it is you're following. I don't have to have the volume profile chart up in front of me. I can simply use a study to overlay here as price action moves throughout the day. These are Heikin-Ashi bars indicated by moving averages crossing over. Regardless, you could see the VAH is the value area high. We know these lines to move during the day, so any breakout of these lines is a opportunity to either the downside and upside. Better yet, from this week, we could see here on I believe this was the NQ, yes, NQ on a 3-minute chart. So closing out the VPOC from the previous day. Here we could see closed out Friday's VPOC. This was Monday's price action. Again, represented by the 70% of trading going on here between the two orange lines. So very range bound between the VPOC and the value area low. And looking for the breakout up here right above the value area high. Again, these lines are overlaid on the regular chart we just saw on the 1-minute chart. Breakout of the value area high in sync with the setup on the T3 chart as well. And boom, to the upside, gives you a stronger move to stay in trend. So that is where you absolutely can use this fantastic study to overlay on your chart, showing you the, again, changing value area high throughout your session. So wonderful, wonderful new study to be able to overlay there. All right, let's jump into the long term as we look for the outlook for the week coming up as we enter into the month of November. Here we could see the long-term TF with our studies here. We could see here in the upper two charts in the upper left-hand corner, the bias on the Russell shifting to the downside. Not in sync yet with the 534, so we don't give it all the points. Here we could see the 4-hour bouncing about by the 50 period moving average is the 51.44. Again, our monthly bias is still to the downside. We've bounced off the 50 period moving average up here. And here on the weekly, we see price action still to the downside, and on a daily in between the 51.44. So pretty much a still bias. Now shifting, I believe last week we said we gave it about a 50% to the green. It has shifted to the downside for the upcoming week. Again, big picture for the remainder of the charts here is going to be an open gap. That's right, open gaps down below. The one I'm significantly talking about here on the TF downside here around 1100. Market on the here on the indices always closes out open gaps. An article I just wrote for, check it out at seeitmarket.com, or you can check out my website, tradingfibs.com. Again, my idea, no guarantees it's going to happen tomorrow or this coming week, but eventually all gaps will eventually get closed, and that is a serious gap here on regular trading hours. Again, not only the TF, but you will also find that on the IWM and the corresponding ETFs for all the four major indices. New chart to introduce this week, as we can see here on the right hand side. We'll be introducing these in the next couple weeks. One of the great things about our trading room is the contributions of fellow traders in the room, of amazing things they're doing. Here we have a very similar price action on the daily. We could see on the Heiken Ashi bars resistance here at the 50. This is a Kiwi trailing stop, as we could see here, with a simple moving average indicated by when price action falls underneath the moving average. We get the solid color, only to return with price action back, bouncing back above the 5 SMA, an indicator that price action continues in the uptrend. And what we like to do, again, that we've been talking about all these weeks, is compare the daily and the weekly charts together. We know that the weekly chart, the downtrend here, we could see on both of these charts, is to the downside, holding underneath this Kiwi trailing stop. But here we see the change in the T3 moving average here in the weekly. We see price action here in the weekly is holding above the 5 SMA. If price action were to continue downside, obviously we'd see the candle turn around like we've seen here on the chart back here in August, coming downside. We would see the trend continue downside, which we would know. We would see the follow through on the 100 tick, the 4-hour chart here, as well as the monthly would continue to the downside, and we'd see the turnaround on the weekly as well. So another great, we'll talk about this in the weeks to come as we see these volatility of both the daily and the weekly, an indicator of is trend continuing to flow upside or downside. So if we see price action flip on us up here to the red, we'll know that we're following suit with the weekly on the volatility, which will confirm again on our other long-term charts that the percentage to the downside is picking up, which then allows the intraday trade, knowing that we'll trade in both directions, but the trend, which might go more than 10 ticks or 15 or 20 ticks, would be that much stronger to the downside when we have a higher probability on our longer term charts to the south side. All right, so we'll be introducing these charts over the next couple weeks. I just wanted to go ahead and show that to you on the Russell. Let's jump into the YM big picture. As we can see on Friday's action finishing downside, not yet in sync with the 534. It's price action approaching the 51.44 here. Excuse me. Price action holding above the 51.44. So the YM still has a bias higher to the bulls than it does to the bears, as we've seen this amazing drive during the month of October. But again, like I just shown you on the Russell, key concern here are these open daily gaps up here, as price action holding above the 200 period moving average up here around 17,400. But again, eventually, I know you're not going to like this, but price action eventually will be coming down and closing out these gaps. Let's jump into the long-term NQ as we see price action on the NQ shifting to the downside, both on a 100 tick and 4-hour chart on the T3 moving average. If we sync up with the 534 here, we could see price action in a much stronger downtrend on the intraday. Key line to watch here around 4,600 as price action in the past has bounced off that 50-period moving average as it bounced to the upside. We could see for the first time in a long time this week the crossover on the daily as price action broke through the 50 at 144 after holding up in mid-October. And so the bias on the NQ on the weekly also lifting to the upside, but still concerned. So the bias to the green on the NQ continues. The shorter term position right now, it's slightly to the downside, but open gaps down below. At least I see an outlook for the next week, both on the YM and probably NQ, is a possibility of coming out and closing this daily gap, whether we come all the way down here to around the 4250s and the YM we come all the way down to 16400, would take some serious selling next week. Long-term ES, similar picture. We're still holding to the upside on a 100-tick range chart as we hold support here at the 50. Here on the 4-hour chart on a 4-hour chart on T3 moving average, slightly to the downside. Again, the majority, the bias still to the upside after finding support here for the last several months here at a Fibonacci. The weekly is finally crossed, so the buy is still holding to the upside on the ES, then more to the downside. We did close out 2050 175 on Tuesday, closing out that gap that we saw here on the other indices. That we had two major open gaps, but ES still, whether we come down to 1940-ish, is yet to be seen. But at least we took care of that 2050 175, so the ES still biased to the upside. Let's finish up here with the crude. The crude, again, we said for the longest term has been in a downside here on the monthly. You can see price action weekly shifting to the upside, but again, we're seeing some major resistance here at the 50-period moving average, slightly breaking to the upside. So we're pretty much a 50-50 on the crude as we're getting a Fibonacci, actually a slight Fibonacci, and we take the high to the low here. Let's go ahead and draw it from about the high to the low. And yep, we're at about 50% retracement as we had a, let's go ahead and enlarge that here. Let's go ahead and take a look at that. There we go, about a 50% retracement right here to about 46.80 as we saw both on Thursday and Friday. So drawing from the high to the low. Again, that's about a, again, it's not an exact number here, give it a round number here up here, but again, we mentioned back here on the market profile, I believe it was on the crude, we have an open gap up here at 47.72, so possibility on the long-term picture we come back up slightly higher, maybe almost to the 61.8, and see if price, we got a double retrace, a double Fibonacci retracement, so double line in the sand. That could be possibly the high for the week. We have yet to see that follow through. All right, again, a couple of the greater trades of the week on the StockTwits trading post site. Here we see from the beginning of the week some absolutely fantastic entries here on the Russell, some to the short. Again, any day, both directions, whether it's to the upside or downside. Let's take a look here on the Russell here for the week. Nice entries here with the setups to the downside, remaining in the trend with the hike in Ashi bars, solid bodies, tails down, and the T3 moving averages in sync with the 534. Let's see if we have any other great trades here. Again, to the upside, it doesn't matter if we're going up or down. Nice setup here with all moving averages in the green here from, again, I was mentioning the TF Russell. Here on a Flex Renko chart, 10.7, hike in Ashi bars to the upside here right after the market opens, remaining in the trend. Again, that was a wonderful session on the Russell as she popped up here on October 28th to the upside and just continued to run that market upside here, an extension of that move as price action retraced and then set up again to the upside. All right, some other great websites that I want to encourage you guys to check out as you prepare for this week's action. Hike and Ashi Trend Newsletter put out by educofin.com. Again, each week coming out with a short-term view for the next week and beyond. The general bias, again, as we've seen on the charts posted here today, remains positive. So, again, some similarities here. And again, as you roll through the charts here, some interesting outlooks. Volatility index on a yearly, raising volatility negative for the equity market, something to keep in mind from the Heikin Ashi bars. And here we could see the Heikin Ashi long-term view on the S&P 500. EducoFin uses the HA Delta, and as you scroll through, you can see the different charts, both for the futures as well as the oils, and looking at the Heikin Ashi market breadth. Great weekly newsletter. I would check it out by going to their website. Taking a look at the candidate for the week. Again, another great website I like to check out, both from the U.S. calendar, and you could switch to the global calendar as well. Looking at the week ahead, Monday with the ISM Manufacturing Index, paying attention to the Red Star events, jobless claims, and employment situation with Fed speakers up throughout the week, can always move the market in any direction. Always looking at the long-term macro view. I like to check out Kelly Letter, the weekly newsletter. Jason Kelly puts out into your inbox on Sunday mornings some great overview to the market from the bigger perspective, as we've seen the Federal Reserve in this week's newsletter. He commenting on that really nobody expects a rate hike at this time. Everybody knows the constant threat of it is just to keep stocks from shooting perhaps the moon. Recession is the widely expected next phase. So taking a look at the oil and the Chinese market does a fantastic job. Also, I wanted to encourage you guys to visit my website at tradingfibs.com, where each week I post my market indices outlook and recap, including the once in a while free Thursday or free Friday live trading room. And again, sites I tend to visit. You can check out the page here from See It Market to the Shadow Trader or Heikin Ashi. There's that link to EducoFin to check out some updates. Last thing I wanted to leave you guys with this. This is a great new little news widget, or the desktop version for that econ data. Check it out. Maybe 5 seconds before they actually, sometimes the news comes out. They're online. If you're listening on any audio alerts, this is a great little widget that you can have if you're watching the economic data during the week, and place that in any convenient place. That might give you an edge on when market econ data comes out. All right, that concludes an insight into the state of the indices and crude. Feel free to stop by my website at tradingfibs.com any day for more information on trading rules, or the trading room, or the e-manual itself. My trading mantra is to keep it simple. One simple strategy: any market, any chart, any time frame will keep you disciplined. If you can find me every day on Twitter at TradingFibs. And as always, I really do leave the crystal ball to the experts. Yes, it's easy to do a recap, but looking ahead, it's always probability. It's a 50-50. I know the bigger picture in mind for the week. Looking at the market action, as we saw here on the long-term TF, YM, and Q this week. Again, the bias has shifted to the upside, but it doesn't mean we can't come back and retrace, especially knowing that we have some open gaps below. I truly do believe that those open gaps will eventually get filled, whether we get them this week here on the NQ and the YM, as posted here by the empty square. That's yet to be seen. But as soon as I see more of my charts moving to the south, then the probability increases that we'll get those lower numbers. It could be next week, it could be in a month, it could be next year. I only trade really what's in front of me on my charts. Everybody, have yourself an enjoyable weekend and have yourself a blue zone day. And to everybody, I wish a good day, a good night, and good trading.